Ciao guys, it's Explain again. Crazy, right? So today I want to start a brand new and concise series on real estate investing. So personally, I've always been passionate about real estate and I would love to share my knowledge with you, and I would do that through a series of very short but clear videos that are aimed at introducing the argument. So, real estate is defined online as property consisting of land and any permanent structures or improvements on the land, but actually we don't really care about it. We want to look at real estate investments, which are defined as purchases, management, and sales or rent of real estate for profit. However, if we start to lose ourselves into definitions, we leave the video with no comprehensions. You are not happy, I'm not happy, so it's not really useful. Thus, to be really brief, real estate investments can be made by individual investors as well as institutional investors. And obviously, due to the size differences between the two, there are some distinctions to make. However, this is the first video and being only, let's say, introductory, I want to break down the two that I think are the most important aspects that would classify investments in real estate. And I will talk about the distinction between individual investors and institutional investors in future videos, but not now. So, the two aspects that I recognize as most important are, the first one is the asset class. So, real estate assets can fall within various asset classes, among which we can find, for example, offices, residential, retail, logistics, and other categories such as senior living or student housing, for example. The asset class is an extremely important feature that inevitably influences the parameters of the investment. So let's take a random building. We can say that this building has some retail stores and spaces at the ground floor, and it becomes a residential properties from the upper floor, so from the one above. And it's therefore key to make this distinction when we analyze a real estate asset. Briefly, the second key aspect to identify when analyzing an asset is the risk profile. So in fact, here the distinction is very subjective, but we can say that there are various different risk profiles that depend on the characteristics of the opportunity. For example, we go from core assets, which are the safest ones, for example the purchase of an already fully operating and active building with good tenants and generating a stable cash flow in line with the market, to opportunistic opportunities, which are obviously the riskiest. That could consist, for example, in a project started from zero through land with a building permit and everything. So, the combination of these two big aspects, the asset class and the risk profile, is able to distinguish the pool of investors that are attracted to certain assets. For example, if we consider a big insurance company that has to reinvest the huge liquidity that arises from the insurance premiums, this company will look for solid opportunities that are able to provide constant cash flows without the need to worry about too many risks. In this case, these companies would then prioritize a core office building in a good location and with a good tenancy rather than a more speculative project. But on the other hand, small companies that are not constrained by the investment of insurance premiums liquidity, they could be more inclined to invest in riskier projects with a more appealing return profile. So we need to make this distinction, and it's key. In these coming videos, I want to point out all the relevant features that must be considered when analyzing the investment opportunities from an investor perspective, but I want to at the same time keep it extremely simple and smooth. So, before I conclude the introduction, I just wanted to point out one last thing that is really relevant about real estate, and it's the fact that real estate belongs to private markets, which is a very different category from the ones to which public equities belong, for example stocks, bonds, etc. Again, I will dedicate the next video to this distinction as it is key, but it's also important to point it out in the introductory one because it's going to be a very big difference from the usual financial instruments that we know. However, this was very introductory. Thanks a lot for watching. We'll catch you very soon with the next video.